Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Scott Richard, Global Head of Business Development at Nasdaq, to discuss interaction control and what the Nasdaq Execution platform provides regarding counterparty interactions. Scott, it's great to see you as always. Welcome back to Trade Talks.
Thanks so much for having me.
All right, let's start with a brief synopsis of what interaction control is and why it's so important for banks and brokers.
Sure. So today's market structure only allows certain firms to define and control who trades with whom, with what stocks, at what prices, etc. At Nasdaq Execution platforms, firms are able to take back control of their counterparty interactions. By forcing firms to come to them to compete, our partners are able to define and control the narrative and create a level of self-determinism with their order flow. So being able to say who, what, and when with your own order flow puts you in the driver's seat.
How does the Nasdaq Execution platform dictate how you can trade?
Yeah, that's a great question. I wouldn't necessarily say we dictate how you can trade. What we do is we provide you the tools and the mechanisms to help define how you want to trade. So if through various forms of segmentation logic and various forms of order types, we're able to help those firms take back that control and define who they want to trade with and how they want to trade with them.
What kind of versatility does the Nasdaq Execution platform provide in regard to counterparty interactions?
Right, so we have a really robust API. We've worked very hard on defining our segmentation logic, and our product team works hand in hand with our partners' product teams to really work through all sorts of types of scenarios on how they want their order flow to be managed. So it could be, as I've said in previous episodes, it could be based on, well, we only want to trade ETFs with certain firms. We only want to trade certain share amounts with certain firms. Or we want to be able to send out indications of interest or other types of order types. Those are the types of things that we work with our partners to make sure that they're able to trade more effectively.
How does the Nasdaq Execution platform help firms with less resources better compete with larger banks and brokers?
Right. So one of the big things that happens in our industry today is firms, because they don't have all their resources at their disposal, end up sending order flow to certain counterparties. And because of that, they're limiting the amount of counterparties that they can potentially interact with. By having a platform with Nasdaq Execution platforms, we are able to open the door and allow them to go out and seek new business, seek new liquidity to be able to trade more effectively. So we have connectivity across the spectrum, and we are able to help those firms invest and really figure out how they want to handle their interactions with other counterparties.
How do you see increased control over counterparty interactions impacting the trading environment going forward?
Right. So yeah, this kind of dovetails on the previous question. When your counterparty interactions are limited to a certain subset of clients elsewhere, and all of a sudden you're able to open it up to others, you are all of a sudden creating more competition for your order flow. So prices get more competitive, speed becomes more important, how you interact with those firms becomes more important, and all of a sudden your liquidity profile looks much better. So no longer are you looking at 1 to 2 to maybe 5 firms that execute your order flow. All of a sudden it could be 10, 20, 50 firms that are executing your order flow, and you're able to see which firms really do the best in certain segments of what you're trading.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.